Can I get a mortgage with just 1 year's self-employed figures? That is a question we get asked so many times. So if that's you, you want to know the answer, listen up, this video is all for you. Let's go. Hey everyone, welcome back to the channel. My name is Adam, I'm an expert mortgage broker, and today we are talking all about being self-employed, but only for 1 year. Now, traditionally, this is pretty tricky to get a mortgage if you've only got 1 year self-employed history, so I'm going to walk you through what we need to do and what we need to think about. Now, as always, if you like today's video, if you find it useful, please give us a thumbs up, subscribe to the channel, really helps know what sort of content you guys are enjoying. And if this is you as well that we're talking about, then I tell you what, grab a pen, take some notes, listen to the end, because at the end of the video, you're going to know all about applying for a mortgage with just 1 year's figures. So let's talk about different types of self-employment then. So standard self-employed person, sole trader is what we officially call you. So you are just self-employed, you invoice people, they pay you money, and at the end of the tax year, you work out what you've brought in and what it's cost you to do that, and at the end of the day, you get a net profit figure. That's what we're after. That's what lenders use. Maybe you're a limited company director, so you own a company, so rather than it just being Joe Blogs, it could be Joe Blogs Limited, and with that company you do your business, you sell your product, you make your stuff, whatever it is you do. The company will make its profit, so the company will earn the money, the company will have those costs, and then you will take your income from the company. So a couple of different setups there. There's more videos on being self-employed, sole trader, there's limited company videos. I'll pop links to those in the description because there's all the information you need to know about that on the channel for you as well. This one though, doesn't matter what you are, contractor as well, 1 year self-employed is what we're talking about. Now, 1 year self-employed can sometimes seem a little bit tricky because lenders, whenever you approach a lender for a mortgage and you're self-employed, they're going to ask you for your last 2 years figures, so whether that's net profit or salary and dividends maybe, they're going to ask you for 2 years worth of figures. So if you've only got one, that can seem pretty daunting to know what to tell them. Now the lender, once they've got those 2 years figures, they're normally going to average them. There's some lenders that maybe take the latest one, or certainly if they've gone down, they'll take the latest one. But on the whole, lenders are going to average out those last 2 years. So obviously in this case, that's not going to be possible because we've only got one. So what the lender is going to do is look a little bit more into your history and your experience and what it is you do. Because we're asking the lenders to take a bit of a chance on you being able to pay your mortgage. You know, if you've got a few years history, you've got a few years track record of, you know, increasing profits or similar profits, then they know you're fairly steady. If you've only got 1 year's figures, then that might have been a fluke year, might have been a good year, it might have been a bad year, you might get better. But either way, they don't really know that. So we're asking the lenders to take a little bit more of a chance on your income. So here is where we need to look at your history a little bit more. So I'm going to use an example here of an electrician. So that's a really popular self-employed type role. Could be limited company, could be sole trader, doesn't matter. So let's say you are an employed electrician last year. You worked for a firm, you know, they gave you your business and you earned a salary from them. You might have earned some extra, you know, bonus and things on top, but basically you got paid by a company. Now, let's say then you go and set up your own electrician business. So you're still an electrician. You're still doing the same thing. You may even still do it with the same company that you're employed with first. So that's quite common. You know, you're employed, but then you go self-employed and you subcontract for that company. They find you work and you go off and get your own work as well. That's really common. But ultimately, you've gone from employed electrician to self-employed electrician. And let's say your salary was sort of £45,000 maybe as a good electrician. In your first year, you're going to have to buy some stuff. You probably got a lot of tools and things. You might have to get yourself a van and things. So inevitably there's going to be some costs in there, but you're getting all the money. You're getting all the income from the jobs that you do rather than just being paid a proportion of those. So all that money is yours. So chances are in your first year, you're probably going to earn, if it's a full year, you're probably going to earn a similar kind of amount. And so if that's the case, and we've gone from being an employed electrician on 45 grand a year to a self-employed electrician, and we can show that we've earned £45,000 net profit, or thereabouts. You know, if it's gone down, then it's gone down, but it may well have gone up. And that's fine, because your track record, your history shows that you can do the job that you're doing. You've obviously got a customer base, it's busy, life's good, you know, you're earning the same, if not more than you were employed. And so there's going to be lenders that will take your income. Let's think about when this is not going to be okay. So if you are an employed electrician, you go self-employed, and those costs we talked about a second ago, so you know, all the tools and materials, the van, marketing, you know, getting yourself out there, that all costs money, and maybe you start sort of halfway through the year and you bring in a little bit, but it's not enough to cover your expenses, or it's only enough to make a tiny little bit of profit. If you've gone from 45 grand a year employed to 5 grand a year self-employed, or even a loss self-employed, that's not really going to be any good for getting a mortgage. Lenders are only going to use that self-employed figure, not going to use that employed income that we had a minute ago. They're not going to look at that anymore. They're looking at your self-employed income. So if that's the same sort of amount, similar amount it was before, that's great. But if it's much, much lower, we're not going to be averaging, we're just going to be looking at the lower figure. So we may struggle there. Tax year, April to April. So if you start in January, your first year, your first time you have to do a tax return will be for January to April. So obviously only a tiny little bit of income. So it'll be the next full year really that will be the one that's going to be used for your mortgage. Now let's think about another time where this might not be okay. I say this with a little pinch of salt because, you know, there's always a lender that will look at all sorts of different things, but just talking mainstream lenders, this may prove a little bit tricky. So let's say you're an employed accountant, office-based job, helping people with their figures, helping self-employed people with their figures, and you decide, actually, I want to be an electrician, I'm going to go self-employed, be an electrician, I'm going to find some customers, or I'm going to work through another firm or something. That's fine, that's great. You may well have a good first year as a self-employed electrician, but the lender is going to look at that and think, well, accountant to electrician, that's very, very different. Obviously it could be any sort of job in between, but two very different jobs. We're going to struggle a lot more to get a mortgage with just 1 year's figures. It is still potentially doable, but we might have to go to some slightly more specialist lenders, and when we go to specialist lenders the rate tends to go up a little bit, so that might not be ideal. We might want to hold off and wait until we've got 2 years figures on that one, but I'm definitely not saying it's a no-go. So let's think about affordability then. So affordability, that's how much we can borrow on your mortgage. Now if we've got 2 years or 3 years or 4 years or more figures, lenders are going to average the last couple of years figures, but obviously we're only looking at the latest year. So that is the figure that we're going to use. Now it could be higher, it could be lower than you were employed, it doesn't really matter. This self-employed figure is the one that is important. So let's say you've got a net profit of £45,000. We're going to be using that for the lender, and typically we might expect kind of 4 to 5 times your income. We won't necessarily work out exact figures now because everyone's different, and you might have a partner with income as well, and you might have kids and debts and things all take into account in your affordability. There's an affordability video on the channel for you to go and look at once you finish this one. But that first year, that salary and dividend figure, or that net profit figure, that's the one that's going to be really important for us to use. And lenders will use that the same as they would do anyone else's average figures or anyone else's employed salary. So don't make any changes just because it's only 1 year. You can borrow the same amount as you could do if that was the average of your last 2 years. It's just not from every single lender. Last couple of points then, let's think about deposit. Now we're asking lenders to take a little bit of a risk on your income, so that might mean we can't quite do it with 5% deposit. Again, depending on your situation, there may be a lender that will, but let's say, for argument's sake, I think we'll probably need slightly more deposit. If we can get, 10 or 15% deposit, that's going to put us in a much better position to be able to get a mortgage with just 1 year's figures. And most importantly, with just 1 year's figures, we are not going to be able to go to every single high street lender. There are 1 or 2 high street lenders that will do it, and there are 1 or 2 sort of just off high street lenders, not quite specialists, but just sort of, not your everyday mortgage lenders. There's no point looking on Money Supermarket or Compare the Meerkat or whatever to find out who's going to give you a mortgage with 1 year, because they won't tell you. you need to speak to a broker. It doesn't have to be us, obviously, but speak to a mortgage broker because they will know who we can go to and who there's just no point going to. So if that is you and you want to talk to us about it, then obviously you are more than welcome. There's a link to our website in the description. You can book an appointment on there straight into our diary and speak to one of our self-employed experts about your individual situation. Failing that, I will see you on the next video very soon. Take care.